Mr. Unnikrishnan joining us this morning, MD and CEO at Thermax. Mr. Unnikrishnan, good to have you with us. Take us through why revenues have been flat in the quarter. Is it due to weak execution in the energy segment, or what are some of the factors at play? And how much did the lower tax rate help profits?
Abha, it is not that there was any flaw in execution in the current quarter. The orders which were carried forward by the company into the current quarter, of which that were needing to be executed with customer making the payments on time, is the one which has made us almost flat or at 2% lower. But otherwise, internally, we are capable of executing a lot more. So it is a timing of the execution needed by the customer, which is would have made this almost looking flat. Next is about, you asked about the, margin. Yes, at the EBITDA level, we are better off at 50 basis points better off. But at PBT level, it may be a little lower on account of the fact that we have amalgamated or we have got our joint venture bought over from Babcock and Wilcox is now become a 100% subsidiary. And that additional depreciation burden would have had some impact on that one. Now, coming to the tax saving that we have opted for the new tax regime at 22%, which is in effect coming to 25.2%. It certainly had an improvement in the current quarter, but not fully on account of the fact that we had deferred tax adjustment to be done of the joint venture when we made it into a subsidiary. So part of the positive is eaten away by the negative for the quarter, but going forward, certainly we will have a benefit of not less than maybe, I would say, near to 8 to 10% savings will be there on the profitability improvement on account of the tax savings.
So, Unnikrishnan, morning. Welcome to the show. You know, the improvement in the chemical segment in your quarterly numbers has led to better margins for you. Do you think the margins can sustain at the current levels, or is there a possibility of bettering them as well?
Well, the margins are better in chemical in any case in comparison to the engineering business. So the more we do chemicals, the margin would improve for the company. Second is within the chemicals, there is specialty chemical, which is approximately at 28 to 30% of all the production that we do. There, the margins are far superior. It's not conventional commodity chemical margins. So our entire intention in the new plant that we commissioned at Dahej is to get more orders from Europe and America for specialty chemicals. It's not an easy task for an Indian company to get specialty chemicals order, but we have been successful. The more we do specialty chemicals, you'll see the chemicals contributing a lot more into profitability. Our top line may not be, they can't help us in top line, but in bottom line, they can certainly help us.
You secure orders worth, around 1,600 crores. Have inflows been driven by domestic orders largely? What's the overall demand environment looking like?
I need to give a correction to that 1,600 crores include an order for a FGD, flue gas desulfurization system for a power plant in India. As a single order, the value of that is around 440 crores, let's say that. So that has certainly helped us to be having a fairly good domestic order intake. But I need to be on the ground level admitting that order conclusions for the consumer-facing industry in the last one quarter had not been very good for any company, including Thermax. But with the budget on, I'm expecting that because a lot of this consumer-facing industries were waiting for the budget to be over to ensure that demand pickup can happen. And there is nothing negative in any case related to demand pickup. On the contrary, there are some very positive moves in the budget. First and foremost, the tweaking done with the second option given for income tax is going to leave a little more money in the hands of the younger lot of people who are in the tax bracket of 5 lakhs to 15 lakhs. So when they have even a couple of thousand rupees extra coming every month, their EMI paying capability goes up. What will they buy with that? They'll buy automobiles, they'll buy white goods. Consumer products is what they're going to be buying. Home market should improve. So with this, I'm expecting as a secondary impact, when capacity utilization goes up in the country, certainly you'll have demand for more capital goods. So it's quite positive. So I'm hoping that that segment of the consumer-facing industry in the country will restart concluding orders, which they've virtually stopped in the last one quarter. That's the ground level information related to order booking going forward.
Okay. Tell us a little bit about the energy and environment segment and what's the outlook there? What are the key orders that have been coming in for this particular segment?
Energy had been a little slow in the last quarter. Environment has overtaken, in fact, because the large order for the FGD, which I mentioned about. And with the pressures on virtually every state government to ensure that the clamor for the better air and better water in the rivers of the country, I'm presuming that Enviro will have a better traction going forward. And there should be double-digit growth for the order intake and execution also, number one. On the energy segment, there are two types of business that we do. One is for the large commodity-oriented one, which are for maybe cement industry, steel industry, oil and gas industry, fertilizer. In that, I'm expecting only an improvement in the cement sector as well as in the oil and gas going forward. Because we already have inquiries on hand for one new greenfield refinery at Bama, and the Panipat and the Gujarat refinery inquiries are already in the market. I was expecting earlier that those orders may get concluded in the Q4, but currently I need to be admitting that it may move into the next year, into Q1 and Q2 of next year. Similarly, in the domestic market, cement industry is not gung-ho, but at least that's one sector where the balance sheets are very clean and not leveraged at all. So there are sufficient inquiries for cement waste heat oriented power generation, that is recovering the heat from the system and creating better carbon footprint and power from that one. And second is two greenfield projects currently under discussion. So these two sectors should be certainly lifting up the order conclusion for the project sectors. I'm not telling that Thermax will get all the orders, but we'll have to fight with the competition and pick the orders. So that's about on the order booking going forward also what I'm looking forward to.
Unnikrishnan, experts say that there wasn't really enough focus given to the sector in the budget. What was your take on the budget announcements? Do you feel a lot has already been said outside of that particular event, or would you have liked to see more?
First and foremost, I'm a very optimistic person, so I won't normally talk negative. But let me tell you, what the Indian industry expected of some big bang announcements, I have a sympathy for our finance minister, because where is the money for it? Government has borrowed 4.9 lakh crores of rupees last year, and you already have a budget deficit of 3.8 corrected number. And currently, though she promised 3.5 for prudency, where did she have the wherewithal to be announcing big bang? In whatever is the limited resources available, she articulated quite positive. And I would say that we're going to take all this with the clarity that an economy which has come down to a 4.8 to 5% growth level, to go back to a 6%, 7%, government should be the leader in investment. And they don't have the leveraging capability right now. So the industry has got to take pains now to ensure that we create capacity and we invest and create jobs. So I'm a part of that. We were very bold in investing and creating two facilities in India in the last 2-year period of time. Going forward also, we are looking forward to which are the areas where we need to be creating capacity. If my colleagues in the industry were to be doing the same thing, I don't think that we will be limiting ourselves to 4.8 and 5%. We can go further. That's my opinion. So it's not that it is a bad budget, nor is it something like a great budget, but we need to look at it that if there is a mop-up capability for the minister to get more money, what will she do with that? She can only invest that and spend that money. So that isn't available currently. That's the reality.
Thanks so much for joining us, Mr. Unnikrishnan. Take your point there, and good chatting with you this morning.